Hello again, guys. Right, this is a response to a question from Nico about this reversal here, and we've got the reversal on euro: low, high, higher, low, higher, high, and then it's gone high, low, lower, high, lower, low, and close. And he wanted to know whether that was a valid reversal. Yes, it was, but today's been a very odd day, very sideways. Yesterday was easy to trade, in my opinion. Lots and lots of trades. Today wasn't so easy. You often get that when you get a strong trending day, big moves, then the following day can often be a sideways day. So low, high, higher, low, higher, high, high, low, lower, high, lower, low. And one of the questions also from Nico wasn't, and that's why I've made this video, was how would you then trade the pullback? Nico's pretty much a novice trader, so this is a pretty basic explanation, but having said that, the actual reversal here is not basic because of the sideways nature of today. More accumulation, distribution, whatever you want to call it. There is this has not been a bog standard reversal. So what you have to do, Nico, to enter a trade like this, you go, that's your close, so this is your new candle. You put your line on the new candle, just really for orientation purposes, knowing where you are in terms of time. Then you drop down to the next time frame down, you watch the reversal. This one actually did reverse on itself, low, high, higher, low, and the 30-minute has gone back out of alignment for the downside. We are now aligned to go long. So and you always go down one time frame at a time and double check that it doesn't reverse on itself. So if this hadn't reversed on itself, then you could effectively you don't have to wait for a 30-minute reversal. I hope that makes sense. You can look for a 15-minute reversal, then drop to the 5-minute, which was the question you asked, then drop to the 1-minute, and make sure you don't go out of alignment. But as it is, because this went straight out of alignment on the 30-minute, you need to then check, well, you can't take the trade until you come back into alignment on the 30-minute. You do, so that's important, because also you do not want to be considering entering the trade on the 15-minute. Well, it should go out of alignment anyway, but we'll double check. So at this point here, remember that's where you were orientated, that's your 15-minute. So you would have been looking for a potential 15-minute reversal to the long side, and then a potential 15-minute to the downside. Now, as you can see, this went straight on up, which is what happens when you get the higher time frame reverse. But that sort of identifies why you have to watch every time frame, because if you had watched the 15-minute and it was playing around here and then started to go down and then went back up again, because it failed to close on the 15 here, and you were thinking, oh, I'll enter on the 5-minute, it's just gone down on the 5-minute, say here, your candles had started to go down, you enter on the 5, then it immediately goes back against you, and then closes up on the 15, and then even goes on to close up on the 30. I hope you're understanding what I'm saying here, which is why even when if this had been a bog standard entry, you still have to use the 1-minute, because it by nature of these closes down, let's go back to the H1, the fact that it's closed down means you get a pullback. Then on the lower time frame it closes down, because it's broken a level of support, the green was low here, then you tend to get a pullback. And the same will go on with the 15-minute and the 30-minute and so on and so forth. That is why you have to go right down to the lowest time frame. The histogram, the RSI histo alert rather, does actually sometimes enable you to get in on an earlier time frame, or you will miss the trade. That is the whole point of having this here. It is sort of a belt and braces type thing, but this will often give you the heads up to getting into the trade on an earlier time frame, say for example the 15-minute or the 5-minute and you can negate the 1. So that hopefully that answers that question. But I always try to watch this and just use this as a sort of stabilizers on a bike, you know. So the 30-minute went back against itself. You'll need to perhaps watch this a few times, Nico. It confirmed here, so now we've got to wait for a 30-minute back down, and that confirmed broken close there. Low, high, high, low, high, 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 low, lower, high, lower, low, and close. And then you can see what's happened there. It's broken that support there. That's the level. And lo and behold, it pulls back on itself again. So, oh, let me just check and move the yeah, so I'm on the right candle now. So we drop down to the 15-minute and we watch the pullback. 1 time frame below the break and close confirmation time frame. There's your 15-minute. Let's double check we're on the right levels. Just need to check this is the lowest low here. The low is 2377. The low of that one is 2372. Just double check that. That didn't look right. Doesn't look any different. My eyes are going bad. Low 2377. Low 2372. So that's the lowest candle there. So we do the high, the low, the high, the low, the low, the high, the higher low, higher high, and that's the break level. Sorry, even confusing myself now, I do apologise. That is the reversal level. High, high, low, lower, high, lower, low, high, higher, low. We needed to break that if it was reversing on itself. It didn't reverse on itself, which is what I was trying to explain in the earlier reversal there. So now, because this hasn't reversed on itself on the 15-minute, all we're looking for is a 5-minute reversal to the downside. So that's the high, that's the low, this is the higher low, lower high, this is the lower low, but we're on the 15. Remember, we can't see any of this over here, so we go to the 15-minute, the 5-minute chart, because that's closed down, closed up, and then we're looking for a 5-minute reversal to the downside. And there is the 5-minute reversal to the downside. High, low, lower high, lower low. Once it's closed below these two here, in particular this green one, that is your entry there. So that was the entry candle. Sorry, that was the close candle there. And look what happens again. Let's just blow this up again. Just double checking that didn't close below that low there. That low was 2407. This open was 2409, so I'm correct, that didn't close below. The close is 2410. Yeah, 2407 was the low. Hope you're following this. Low, high, higher, low, higher, high, high, low. Keep singing the song until one breaks it. Lo and behold, what happens when it breaks the low? It pulls back on itself again. And that's what happens. Breaks of support cause pullbacks. And I didn't cherry pick this, guys. Let's have a look at that. I just need to double check. Yeah, I'm on the right candle. So we're now watching the 1 minute. The 1 minute, that's the lowest low. This is the reversal level for the 1 minute. There's your 3 candles. High, low, lower, high, lower, low. Low, high, higher, low, higher, high. And we sing the song until this tests this and closes above it, which is that candle there. By the looks of it, double check the close. 112386. 86. If it closes on the line or above the line, that's considered a close. If it opens above the line, that's also considered a break. Break and close, close and break. So 1 minute has reversed against itself. We now need a 1 minute reversal to the downside. It carries on up. It's tried to test that 5 minute level but failed to break it. Remember, I'll go back to the 5 minute. The 5 minute reversal level is this one. High, low, lower high, lower low. So it failed to get up there, the high of this red candle, but it will try and test it, and if it reversed, then you would need a reversal on the 5 minute down again. You would need to do the whole process on the 1 minute again, and then you're good to go. So on the 1 minute chart now, just double checking to the downside. 1 minute high, low, lower high, lower low. Carry on singing until it breaks the low of the penultimate candle, which is this one. It closed through it. Well, it gapped through it with this doji here actually. It failed to close there. 2388. In fact, it closed on the line by the looks of it. The low of that candle there. Yep. So that's considered a breakdown, effectively. And that's it. You can't go any lower than the 1 minute. You could trade the break of the low of this candle. So that candle there would have been, I mean, you can wait for a pullback on the 1 minute again, and as you can see, it did actually pull back. You should wait for the pullback, should I say. It did actually pull back on this one here. So another reversal to the downside would have been the correct way to trade this, following the rules. That was the 1 minute reversal to the downside. Low, high, high, low, high, 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 low, lower, high, lower, low. Then it's even pulled back again. I said this was a sideways day. It's a complete nightmare. But this is what I do. I've watched this for best part of 12 years, I should think. I sussed this out after about 4 years of studying charts. And so this is why I understand that these breaks of support force the price back up again, and this is the best example in the world to double check and check and check and check. It's amazing actually. So I'm glad you brought this one up, Nico. So it's even pulled back on itself again. It's failed to reverse. It would have had to have closed above that level there. So in this instance, when you get a you can't go any lower on the time frames. This, in fact, if you'd have waited patiently for that pullback here after this confirmation down here, then the absolute correct entry would have been the break above, break below rather. Just double checking the high of that one for the correct ultimate high, as it were. High is 2390. The high of that one is 2390, double top. And this is what I mean, guys. I'm going to have to be careful now not to run over time. My videos have a tendency not to save if I make them too large. This is what I mean by flushing out all the buyers. All of these reversals have created, they've brought in buyers, and they've potentially taken out stops, but more importantly, they keep getting people to buy into it and buy into it here and buy into it, and then they take them out and they take them out, and it's run by algorithms at this point in the day, I imagine, but because it's between 6 a.m. in the morning, 2 hours difference, so 6:12 is probably algo time, and they've flushed everyone out, and then there was no drawdown. If you'd entered based on this one without waiting for the pullback, that was the proper entry that I would have taken after having watched all these pullbacks and what goes on. But technically the proper entry is to wait for a pullback here after this final 1 minute confirmation down, and you can see it did pull back as well. And I keep talking about breaks and then pullbacks, breaks and then pullbacks, but you do run the risk of being left behind on that one. So with the momentum of that, you can see also you've got this as an indicator. It's broken the -20 line. That is a momentum trigger there. We've actually got the break, the pullback, and the break and close here also. So that is where I would have entered without a doubt using the RSI. But it's followed the rules. That's the thing. That's how built this strategy: break, pullback. It just even did it on that 1 minute. That is just crazy. So here, this would have been the entry, because it's engulfed the previous bar. It didn't create a higher high, it doesn't matter. It's broken the low, they were double tops, and that is the correct entry candle there. And zoom out and you can see we would have had a tiny bit of drawdown on that one, because you entered, add the spread to that, so about 4 pips drawdown. They're less than 4 pips drawdown, and then price just collapsed, and you got a pretty fast 13 pip move there, and then it just carries on down. That is the ultimate fake in and out and in and out, but you were protected by the pullbacks. I hope that helps you, Nico, and anyone else that watches this. If you need me to re-explain it, do another video with it, it will come out exactly the same. This is worth pausing and watching time and time again, guys, because this is the ultimate description of what I do with the break and closes down. Watch the pullback, and continue watching the pullback until you finally enter. And as I've said before, all the buyers are flushed out of the market. That's what these trends are about: 1 minute trends and 5 minute trends entering these 30-minute reversals and hourly reversals. Thanks for watching. Have a great evening.